What's up, everyone? Gonna start in a couple of minutes. Let's let everybody get here. All right. All right, guys. Give me a sec. Just wanna enough with the music. Let me invite everybody else. All right. Boom. All right. Well, this week should be very interesting, honestly. So I'm very excited because a lot of things coming together nicely, pointing to uh, uh, less resistance of a trading environment. It's been very choppy in recent last month, for example, in the indices, as we were getting well, this type of price action. S&P 1 hour, for example, was this 8 hour. So a lot of chop fest, and we finally started selling off nicely, breaking all kinds of supports. And we all going to be discussing this, as it's going to be offering very nice trading opportunities after this messy run right here. So we finally started breaking down and trending towards the downside. Even this last week was still very annoying, as you can see, expanding pattern and basically running liquidity. People who bought here to after seeing this candle breakout to the top side, they get their stop losses here, getting stepped out, and people who shorted on this candle when this candle was all the way here, taking out this support, then their stop losses were here, so they get stepped out. So finally, people after seeing this bar thinking, all right, we finally did, third time is the charm, and they get stepped out one more time. And these people who saw this aggressive selling bar also get stepped out, and here, and then we sell off, we probe, and we're unable to take it out these highs, and we finally started rolling over. I'm actually short from last week, but let's wait for people to get here first. If you have any questions, more than welcome to links are whatever you're watching this, links for Discords and Telegram group are in the description page. So more than welcome to stop by, say hi, discuss it, and do all that jazz. All right. Well, so the easiest way to start the week is we always take a look at the fundamentals of the upcoming calendar. And honestly, there is nothing interesting coming up aside from ISM services, I think, on Wednesday. But until Wednesday, there's pretty much nothing of interest. That means that without the news, without somebody coming out and saying anything to influence these markets, we're able to probably get cleaner technical markets, which will allow us to get into trades and stay in those trades without being interrupted with some major releases where we have to either take profits, close the trades, or at least cut position sizes because of the news and news releases. So up until Wednesday, we are pretty much in the clear with the technical trading. And why is it important? Well, because with all the fundamental news that came out last 2 weeks, we had the CPI and PPI, which came in hotter than expected. I mentioned it multiple times. What does it mean? What that means that the narrative where everybody expected inflation to be conquered and over, as it was printing lower numbers in the last 2 or 3 months. Now it's finally started going the other way. It started rising again, and since the started rising again, and coupled with the fact that all the economic releases of the last 2 weeks, from non-farm payrolls in the beginning of the month to ISM numbers um, last week, they basically pointing that the economy is very strong. So this allows Fed to stay very aggressive with a tightening cycle and raising interest rates to combat the inflation without hurting the economy. So that means that they can be more aggressive rather than gentle, because the economy is in good shape according to all these stats, and it can take as the inflation being the priority of things. It's good. That means that the economy is doing fine, and the Fed is allowed to be very aggressive, handling and getting rid of the inflation pretty much. So that means the interest rates are the primary. As you can see, this is the result of the interest rates last week. We were in the just up, and it looks like we're resuming. We started going up for um, all of last week, Ezekiel, since the beginning of the month. Honestly, this is the yield on a 10-year. We started heading back up. We sold off. We started selling off in October, thinking that the inflation has peaked and everything is cheerio in the world, but that's not the case. The inflation came back, and since the inflation came back, that means that the bets on the fact that the Fed is done tightening and raising interest rates are not accurate, and that means the markets have to reprice the new information that the Fed will be raising interest rates. So if the Fed raises interest rates, the bond yield will be rising. If the bond yield is rising, that means the US dollar is becoming more in demand, because the US dollar is now yielding more than its counterpart currencies, right? So if the Japanese yen yields you nothing and US dollar yields you 5%, and you have $100 to invest, where would you invest that $100, right? If everything else is equal, you will go with somebody who gives you more bang for your buck, which is United States dollar. So, with the United States dollar having fundamental and now technical wind behind its back, I fully anticipate that we should continue the U.S. dollar strength, and as you can see, that means that other currencies against the U.S. dollar should be selling off, which is the case with the euro dollar, with the pound, Aussie, New Zealand, and pretty much everything else. So the dollar yen is finally, after getting beat down like a rented mule, started making higher highs and higher lows. So with that fundamental picture in mind, we're basically, our job as traders now to look where to enter into position into the direction of the trend. Now, we might be a little bit oversold somewhat in all these currencies. So waiting for at least some semblance, some pullback to not to jump immediately at the lows kind of makes sense to me. So at a bare minimum, for example, with the uh, with our friends in British pound, I would probably, this was the order block I was looking at. Yep. So selling this order block here. So basically, I want to see a retracement into this trend line, this zone somewhere here, and roll over to the downside. It doesn't have to be perfect or ideal. It can break and then come back down. Doesn't matter. More interested in selling this congestion here, basically, right? So this is the low level of this congestion. This is the high level, and my stop loss will be above this level. This way, even if we wick, uh, there's a wick to run the stops and grab liquidity above. I know that most traders will want to get into the shorts after understanding that all the traders who are not short yet will use it as an opportunity to get short because of the fundamental picture I just outlined. So that's why I'm okay with. I'm not going to be buying the support here because it makes very little sense to stand in the way of this freight train down right now. And as equities and the bonds are being repriced to reflect the new reality, it will be very silly to start picking the bottom, because this if you look at the daily, uh, so if you look at the daily S&P, we just took out the trend line here, right? So nothing stops this from rolling over and retesting this previous congestion here. So this would be the support. Um, so it's somewhere here. Oops. So retesting the support here, these levels here, probably can happen very easily. So obviously we can have pullbacks, this and that, but it going down makes sense. Like I said, technically we are breaking down all sorts of support. We were making higher highs, higher lows. We were unable to. Then we made another so higher low, low, higher low, higher low, higher low, and then we were unable to make a higher high, and we took out this low. So now the trend had a market shift to the downside structure, and you can actually see it on the line chart very easily, as you can see here. So now we have a shift, and when these shifts occur, there's usually at least a few waves down, and so any pullback to major previous support, now turn resistance area, is money to sell. So because I think this is not done, and we will easily take out this support, and probably will be retesting this area here. In fact, let's draw some fibs out of curiosity. So if we draw fibs from here to here, I like to buy the between 618 and 786. In the middle is the 702 fib, which ICT calls the optimal trading entry, OTE, but whatever. It's just the zone between 618 and 786. Usually it's a deep pullback. So highly expect for the next 2 days the continuation of the sell-off, maybe into here. Before ISM news on Wednesday, we might get a bump. We should sell that bump, back down it should go. Okay, so that would be the plan for the week. Continuation, some new spike. We use that spike to enter into more shorts and sell. That's how I would be trading in the indices this week. Let's take a look at gold. Gold got absolutely clobbered. Gold is a very peculiar beast. As you can see, they couldn't buy enough of this shit as it was going up. No pullbacks, no major pullbacks, right? Just buy, 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 and now they're puking the hell out of it. So all these morons who are buying a late stage rally here, they literally, this is them getting completely fucking wiped out, and now they can't sell it fucking fast enough. It's absolutely mind-boggling how some of these traders are trading, but it is what it is. And I think that we will be retesting this daily 200 pretty much guaranteed. So again, even as is with all risk assets right now, if the US dollar will be becoming more in demand because it's yielding more, that means in comparison to gold, the gold will be, well, since it's not yielding anything, it will be yielding even less now. So the price has to reflect that reality. We essentially, if you take the October bottom and the what was it, February, beginning of February top, we've essentially just retraced 38.2, and we it was temporary bump and going back down. So I fully expect to see this 50% retracement, because you had this previous congestion here. It just makes sense. So the question is, again, what do we do with this information? So I am looking to sell gold around 1820s. I'm not going to be chasing it up here. There will be one of these pullbacks, okay, and that's what I want to use to enter. So there's no point in entering here. Even this is the, well, Sometimes you get these, but this was just late stage buyers being um, stopped out and liquidated, and somebody who was accumulating all the way down here, basically taking huge position, the huge the accumulation that was done throughout this rally. They are pretty much closing positions, and you can imagine how much they've amassed to cause such huge spikes, because they just blew through all the order book. All right. And now there's a gradual sell off happening in a very controlled manner, kind of like it was on this uprise here. And you can see that it does this shit all the fucking time, because same price action. This is why somebody's manipulating the fuck out of gold, because look, same thing happened at the bottom here. People were selling. You tried to rally, sell, and then massive candlesticks with pretty much no pullback, massive candlesticks, no pullback, right? And now we're getting also these massive candlesticks, no pullbacks, right? And down we go. So I'm not sure we're gonna go all the way down to retest these lows here that we've made on the um, in last year in October, but at least 50% retracement, or more likely. I'm aiming. I think the bottom will be somewhere around here. So my monthly candle bottom candle target is here. It will obviously take a month or two to get here, but this is what I'm aiming for. And again, as you can see, it's between 786 and 618 fib zone. So retest of this double bottom breakout point, and then we'll see if it goes up or down. But ultimately, this is what I'm looking for. If the dollar to continue its uh, trend up. So we also last last week I've pointed in our inner circle about this chart right here. So as you can see, this is a monthly chart. This was the all-time highs here. This is the obviously from the 90s, blah 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 blah. All right. So this was at the 2020 high. This is 2022 high, around 2000, right? And what are we seeing right now? Well, we've got to this level right here. This is the level. Right. So this is this is the level of where the bodies couldn't close above previously, and we essentially gone up to it, and now we're selling off from this level, and we're selling off in a very peculiar manner. Very, it's called engulfing candle and railroad tracks, right? So what it means is usually when you get price like that, there's at least some follow through to follow in a month, in a month, at least next to the month to come. So any pullback in the middle of this or lower, I don't think we should be revisiting even the middle half of this candle, and more likely than not, we will be. This is my target here somewhere, either the top of this candle or the body of this candle will be the bottom of this movement. But this is an engulfing candle, and usually after a powerful engulfing candle like this on a monthly chart, we should probably see at least some follow through. We have 2 more days for this candle to close, obviously, and I doubt it's going to close anywhere here, but it will close somewhere relatively around these levels. And we'll revisit it once the March 1st comes, but this is not a bullish sign for gold at all. So any pullback should be sold again. And why am I talking about pullbacks and what and long-term charts? Well, because you have to understand, if you know the direction of the market, that's that's pretty much at least a majority part of the battle, if it's going up or down, and how you enter, what techniques you use, whether you use institutional order flow, you use ICT, smart money concepts, or basic technical analysis, or no analysis, and you just get the direction right. If you apply correct money management, risk management techniques, you should be okay, because direction will always save you. Because if it after the pullback is over, it will start moving you back into your direction. So even if you're a dummy and you sell somewhere the bottom here, if you use it with a small enough size with a stop loss somewhere here, you should withstand the heat pretty fucking easily. You know what I mean? So yeah, let's say you this is a piss poor entry. You enter here, and instead of waiting for a little bit of a pullback to sell, it goes, and then it goes up a little more up, and then it reverses. So if that's why trading on something like on a 1 minute chart, yeah, you better have a very tight stop loss, and because you're trading a huge size, and a little bit of a wig against you basically stops you the fuck out. And that's why most people trading on small time frames just get absolutely destroyed. And I'm completely against the fact that what ICT is teaching, that 1 minute nonsense. It's fantastic, but it's an excellent exercise in tape reading. But most people should not be trading a 1 minute chart, because they have absolutely, you have to have a pretty decent grasp on how markets move before you hop on F1 car type of time frame. Okay, so all that said and done, wait for pullback, be patient, don't fucking rush don't FOMO in like a retard, and you'll once the price gets to some kind of a decent level, whatever level, however level, that level you determine to be, like I said, any decent technique will do. Smart money concept, support resistance, TA, whatever floats your boat. Once it gets there, you can start layering into position. Take one position with the wide stop loss, with the doesn't matter, and with a positive risk to reward. Okay, so that's the plan for gold. I'm gonna start looking for sells around basically this level, or this level here. So I'll give it some wiggle room in the 20s and up to 30s, and after that, I expect it to start resuming the downtrend. So that's silver. Bitcoin is very interesting, actually. So this is the two scenarios I'm looking for Bitcoin. This is the buy scenario I posted when we were still here, that I'm waiting for a return to this zone here. Basically, this trend line will be a buy, and you can use 1 hour order block here to enter with the stop loss below, blah, blah, blah. And then right now, I am still looking for a sell. It didn't quite, it actually, it retested lows of this candle. Oh, it actually did not. Well, so I was my entry order is here at 23,830. This is a Coinbase chart, but basically, if you draw fibs from this high to this low, whatever broker you use in the 618 fib, whatever it comes in, that's where you can sell your. That's where I'm looking for sales being, basically, and give it some wiggle room, and I think that's going to be enough. Because again, with the fundamental analysis, if risk is to sell, can continue to sell, and the US dollar to strengthen, then the component of the Bitcoin versus United States dollar, which is the US dollar is getting stronger, that means that Bitcoin will be getting weaker. That means it should be selling off. All right. So that's what we're looking fundamentally and technically. We're aligned, and we're looking for sales. Me personally. Again, we have to be patient with the pullbacks and not just enter willy nilly whenever you feel like it. So I guess same situation with the euro dollar. Um, let's see. Uh, I don't have any analysis here. Okay, it's interesting. So let's take a look at the daily. All right. So if you from the September lows to recent February high, we haven't even ticked the 38.2. Okay. Also, there's a liquidity pool below these lows here, right, which is around the 32. So for it not to take out this low and tap 38.2 would be a goddamn miracle, I think. So any pullback, again, it should be used for sells. So let's take a look where we can sell this. Honestly, this is quite choppy. I would only start being interested in sells if we return to somewhere to these levels here. So actually, I'm honestly not even interested in the euro. That's my honest truth. I think that's an easier sell uh, will be pound, because pound should accelerate lower faster due to euro pound is should be rising back up quite soon as well. So a little bit of a pullback is I'm looking to sell the pound rather than dance with the euro. But you can actually split your position in halfsies and sell one or the other. Here, you just have to, because this is so choppy and you can't really use any of these order blocks that easily. So the last resistance that I see worth a fuck is this level here, pretty much. All right. So the top right here. So if we go all the way up there, which is a pretty big ask, to be quite honest, maybe so maybe I'll put an alert around the 106.50 in the midpoint of 618 and 786, and I will allow might sell, but I will need to give it a little a nice wiggle room, because otherwise. So where's the 38.2 from the daily? And I would target 2 to 1. Not bad. Here you go. I would give it a 2 to 1 to do a pullback. Look for sells on alert, and target the 38.2. 2 to 1, not bad. With a what? Well, it's kind of wide stop loss, but still smaller size. And you can layer, and you can add half here and half at the top here. Okay. So that's euro, and all these currencies pretty much playing out the same book. So this is a 4 hour. Why is it here? So 1 second. There we go. So this is actually a pretty good sell, because this is a much cleaner chart, unlike euro. So let's see. This is probably pretty much of, so is an order block. It starts from here to here. So let's see. Hard time frame. So this was just 1 day sell off. Jesus Christ. So yeah, I think I'm gonna put an alert somewhere around here first. Put an alert. Boom, boom. Once it starts entering into the zone, I'm basically, I want to see. I don't know which level it's gonna start selling off from. This is 618, so maybe somewhere here. Maybe it says 786 with a stop loss. Probably put its stop loss above here. So this would be my trade. 786 sell here. Stop loss above these highs, and we can target past these lows. Again, 2 to 1 is in the cards. It looks like, and probably you can even keep it for longer, targeting these lows here, where I have the long-term limit, range limit marked out here. So I think the 666, the devil level, should be maybe targeted by the end of the week or something. So again, but we're gonna wait for the pullback to enter. We're not gonna be selling bottom like rookies, and that's about it. So everything looking very, very similar. Early Asia is trying to take this up. God bless him. This will allow us to find entries for sells. Okay. Gold, S&P, NAS. Here I drew something last week, I suppose. So yeah, NASDAQ is probably, it can roll over even from here. So basically what the idea behind selling here, this is probably, yeah, 30-minute chart. So we, because of this inefficiency here, I think that we're gonna close it or tap halfway. Well, I was hoping we're gonna close it, and we tap this order block here and start rolling over again. So because a lot of people will start selling at this level right here, because it is a previous support, now return resistance. The stop losses were ran, and now a lot of people will start reselling here, but I think it's a little too early. So actually, let's draw some fibs and see where we are. Normal fibs. So 50% retracement comes in somewhere here. 618 will be even better. Obviously, ideally, you would sell. But the thing is, I don't think it should be going back to these highs. It can, but it shouldn't. So this would be a sweet sell, obviously, at 786 around this congestion, because then you just put your stop here, a little higher here, and you have this previous support now turned resistance. See, we already retested it twice and sold off from here. So there is no reason for us to go. There's no reason for the price to be taken all the way up there anymore. Okay, so 50% retracement probably will be sufficient, if not even 38.2, for a continuation trade. Again, on a 30-minute, this looks like a lot of distance, but on the grand scheme of things, it's on a daily chart, it's nothing. So it can easily let me just do this. See, this is just one candle, and there's no reason for us to retest these highs here anymore, because we broke through them. This was these lows here. We broke through them, and we retested them. People got short, and now we need to start pushing even lower. Take out this level, take out the 200, and maybe go all the way up here and take out this level before we find support. So nothing says that. So a little bit of a pullback, and then we basically form one of these brutal candles. And like I said, since we have no news, uh, we should probably anticipate that we're going to continue sell off until Wednesday, when we have ISM. So that's pretty much it for me. If you have any questions, anybody, you can ask. Let me see the Discord. Yo, Robbie.
Yo,
You there?
you were in Discord. You were muted, so I linked up the YouTube.
Oh, god damn. My bad.
In Discord, you were muted. So I linked up the YouTube. No, you're good. You're good. I linked the YouTube for the people that were in here.
Hold on, give me a sec. Hold on, give me a sec.
Yeah,
go ahead.
Hold on, give me a sec. Give me a sec. Yeah. Hold on, give me a sec.
All right. So yeah, that's it for me. Let me just kill it, because I forgot to unmute myself there in Discord. So yeah, guys, if you want more, just join the links of the Telegram and Discord and all that stuff to have live conversations all about this. All right, hope it helps. Enjoy.